Good afternoon, ladies and gentlemen. Good afternoon. Hope you're doing well, guys. If you can give me a quick sound check, please, before we get going. Awesome. Thank you very much. Hey, good evening, Braden. Good to see you, mates. Hey, Nadia. Good to see you. Alrighty. So, we've, yeah, so far not really seen, still not really seen too much happening. I tell you, it's becoming a bit problematic for me, for the streams. Because, I mean, what the hell do you talk about, you know? there's just not a great deal going on at the moment. Still, this is, I think this is like the third week. We've had a couple of decent moves in the stock markets now and again, haven't we? But I hate coming on here and being like, oh yeah, well, not a great deal to discuss at the moment. We had obviously really good momentum throughout the election, but the weeks before that were pretty crap as well, weren't they? And yeah, I mean, look at these stocks. Look at the US stock market. Yeah, this was the performance from Monday. This is this week. Bearing in mind we're on Thursday today, we've only got 2 sessions left. The Dow Jones was actually okay. We did have this Tuesday move, which was, I would say, a lot nicer than the NAS 100s. Yesterday was, to be honest, guys, it was not great, was it? Hey, good afternoon, Ian. Yeah, so it's been a real mixed bag. It's just been a real mixed bag. There was a lot of trading activity yesterday, but that was primarily because there were trades that were previously on that didn't make it. Go down here for a sec. Yeah, so, I mean, there were a lot of trades yesterday. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trades. Now, none of those trades were actually taken yesterday, but we had a couple in gold from the CPI. We had a couple in the GA from the CPI event. So that's 4 trades right there. We had a NAS 100 trade from the CPI. So that's 5 trades right there. And then yesterday afternoon, we had a couple of trades in the Dow Jones. We had a couple of trades in the NAS. Obviously, one was taken before the market breakout for the CPI event, which was the loss. But out of those trades, we had 9 trades. We had 1, 2, 3, 4. So it's not too bad. It's 4 losses, right? So it's a 60-40 win-loss ratio yesterday, and that's not too bad. The weekly return so far is up at 3.35%. Obviously, as always, on the proviso that you took every single position indicated. So that's pretty good. This month so far is at 6.2%, so I don't think that's too bad either, all things considered. But it's just been really bloody slow. Incredibly slow. I mean, so far, if we look at the... I know you guys can't see this, by the way, but if I'm looking at the total monthly gain and loss, and we're nowhere near what we were last month at the same time. So we've still got a long way to go. And I don't think we will. I don't think we will get anywhere near that now. I genuinely believe that everything is coming to a halt in a real slowdown. We'll get the outlier weeks here and there up until the end of the year, but I do think things are really, really, starting to wind down now. In terms of what's going on today, economically speaking, Thursday is, I believe, a very quiet day. It is a very quiet day. We had the PPI out, which was a 0.2% as forecasted, which is a 0.1% uptick. It did not cause much market volatility, as you will see. The 130 candle is the candle that is on right now, and PPI has genuinely not really nudged the markets. The NAS 100 probably a little bit more so. It's having a bit of a dip down as a result of it, but not too much. We're not talking about earth-shattering moves here. The margins for the US stock market today, obviously I will get onto those soon, but they are actually okay. So that's a positive. Looking at the trading margins that we're going to be utilizing for this afternoon's trading session, they make sense. They're nice and clear, well articulated. We don't really need to get down with the down with the intricacies too much. It's pretty clear cut. So that's a positive for us. Probably the Dow Jones more than the NAS 100, but both of them are relatively clear cut. This morning's European session. We don't do many reviews in the afternoon on the European session. European session for me is arguably not that great. I don't really focus on it too much. But credit where credit's due, it has actually had a really good move today. The EU 50 at 1.47% and the GER 40 at 1.5% gains. UK FTSE is the one that's lagging behind. It still had a relatively decent move, but it's a lot of consolidation at the top. The DAX was really good this morning. Really nice, strong breakout. Beautiful little order block here formed as well just before the break of structure. And we got this really nice big institutional leg up. As you can see here, we broke through the structural point, came up to this area, came back down to retest this. I actually don't know, really, if that was even worth a retest in the first place, but it did. And then it's continued trading up a little bit from that point on as well. And then we have the EU 50, which we can all agree is pretty good as well. So European session so far has definitely been performing well today. It hasn't done previously. It's been very range bound, but it has done well at the moment. Recapping on yesterday, gold was really quite something. So far this week, we have seen quite a significant sell-off. So bearing in mind election week, we saw a big sell-off as well, but it has continued going. We look at the daily time frame just to get a good picture of things. We've actually crushed the liquidity level. So this is the one that I had in my charts to begin with. And that's absolutely been, that's been crushed. And now we're coming back down to what I would probably indicate is the mega one. I don't know. Would I classify that as the mega one? I'm not entirely sure. I don't know how I would classify that in terms of the priority listing, that I usually look at these liquidity zones with. It's probably a more prominent one than the one above. And it does look as though we are kind of finding a bit of a flaw here. We've had a contraction in today's candle, which could indicate buying pressure entering the market, which would yield relatively decent results for a potential long, because the long target from this point is at around 25.90. So that could be okay. Excuse me. So let me get rid of all yesterday's trading. Have a look at this area in here, which would be representative of the first starting point for the major price action pullback that we've had from this one. And then this becomes our trading margin now. I think based on the fact we don't have to deal with Fed Chair Powell until later on this evening at 8 p.m. GMT, we could probably look at an intraday position in gold today at a breaker structure above this area at around 25.60 for a move back up to 25.84. I'm not completely confident in the margin available here to be completed before the Powell speech. And just to confirm, I do not want to be in a gold when the speech begins. So it will require possibly a bit of manual input towards the end to see how far we can get. But the trade idea as it stands is this. Breaker structure entry. We're looking for a target at the bottom of this breaker structure point that we would utilize if we were going short, not the major liquidity point above. So slightly different in the target today. We're looking at an entry of 2561.9. Target is 2578.33 with a stop loss nicely down here at around 2555.44 to account for any potential wick throughs. This is yielding us a 1 to 2.54 based on a 0.25% risk size. Okay, so nice little trade idea. Pending order. That one looks, I don't think that one looks too bad at all. Gold is currently minus 0.6% down. I think if we can get just back up to even this point and close out the day possibly like here, this is going to be, that's going to be okay. Now, from where it's currently situated, that's a 0.82% move up, which means it will probably close out about 0.25% in the green today if it does, or maybe 0.2% down, which is very, very normal for gold to do. So it kind of makes sense from an ATR perspective as well. Yeah, so that's what I'm proposing for gold. I don't want to short gold again. Obviously, we had a long on the initial breakout, and then one of our shorts triggered as well from yesterday's move, and this is where today's move has come from. I don't want to go short anymore. I don't want to short gold anymore because of the fact that we're in this big daily pot of liquidity. So the next time now where there's a path of least resistance is undoubtedly going to be at 25.10. And things begin to change in the gold dynamics when 25.10 is breached. And that comes from a perspective of officially seeing a major shift in risk sentiment. So then we have to go and have a pretty deep dive on the DXY, which at the moment, guys, is just taking off. If we look just quickly at the S&P 500, when have you guys seen the US dollar and the US stock market rallying at the same time at this kind of level? It's not normal. It's very, very unusual to see both going for it at the same time. So, yeah, it's going to be really, really interesting to see what kind of plays out in 2025. I think, based on these current dynamics, definitely. Because generally speaking, this is the kind of price action that you would expect to see. It's quite normal when the stock market's rallying, or maybe not that harshly. You kind of see a little bit more of the kind of sideways consolatory motion, price equilibrium type stuff playing out. You do not see one of the biggest price rallies that we've seen in the DXY of this quality at the same time. I mean, even if you just scan your eyes back in time, the last time we had a clear cut price rally in the DXY of this magnitude from 100 to 106.85, I mean, you are seriously having to go back some. I mean, that's 2020 March. So this big rally that we instantly had here was the coronavirus. And before that, then, probably the nearest to it was this rally that we had in here, and that was in 2018. So, this is not usual. This is not normal whatsoever. Very, very unusual price action in this US dollar at the moment. Now, of course, with the rates coming down from the Federal Reserve, you would then also think, okay, rates coming down, currencies, 9 times out of 10, they follow the base rate. So if interest rates are high, the currency is going to be high. If base rates are low, currency is going to be low, and so on and so forth. No, not with this situation. It's the opposite. The rates are coming down, the bloody dollar's rising. So interesting, the demand, because we have to think, even in the currency markets, we have to think about the basic laws of supply and demand. Oversupply of the dollar is obviously going to lead to it selling off, and demand is going to see it increase. So what's in demand? Why is the dollar in demand at the moment? No, what is that driving factor behind the dollar? Because once you find that out, you've then got the answer. What is the real, true driving force behind the dollar at the moment? Is it war, or the fear of war? Purchasing of weapons, purchasing of military vehicles, jets, tanks, stuff like that. You would always see the currency of a country rally in war times because of the purchasing power. Now, the United States dollar is the world currency. Everything's purchased in US dollars. So you also have to take that into consideration. Now, I don't think it's a Russia situation, personally, because Russia's been paying for everything from their gold reserves, and now, as it happens more recently, they've been using cryptocurrencies. I will have a moment on the crypto side of things as well in a sec, but yeah, dollar index for me, and sorry for kind of going off on a little tangent here. Dollar for me is a really, really interesting case at the moment. It's a really super interesting topic. And I like talking about it with you guys because you can probably offer some alternative contrarian view, or maybe you've read something somewhere. So if you do have any thoughts on it, then just let me know. If you don't, that's absolutely fine. But yeah, very interesting situation the dollar's in at the moment, I find. So looking at the rest of the markets then, intraday style, of course, we've got some bits and pieces going on. This was our trade idea in crude. So yesterday afternoon, we dipped the toes into liquidity. I've removed the trade panel now, but this was the long in Brent. So we came down, dipped the toes in the water. It's about 4 o'clock in the afternoon. Pending order 71.67. Target achieved 73. It was a pretty straight shot. We then ended up having to range throughout the night here. So this area we had to spend a bit of time in, but it did end up hitting that 73 area, so that was really nice. US crude at the moment, similar situation, but we didn't bother trading that one. We've already got a long in gold that's been plugged in. In terms of the FX space, the Aussie NZD, I've spent some time clearing down everything, but the Aussie NZD was a stop out. So we managed to hold on to this one for quite some time, and it just kind of dwindled along for a while until 2 o'clock yesterday, and then it hit that turn, and then it came up and it took us out. So that one was a loss. In terms of future trade ideas, forward looking now, frankly, guys, there's not much in there for me. There's nothing else that I really want to get stuck into in terms of Aussie NZD. Yeah, opportunities at this moment in time. There's just not. Aussie dollar probably would have been the better one to trade, in hindsight, of course. So yeah, it's a little bit of a shame. We did have an okay little sell-off here, and that was from sort of Tuesday afternoon straight the way down. It wasn't an easy travel down there. We did have to spend some time ranging, but it has slowly made its way down. Looking at the daily time frame, we can see that the market had a nice rebound at the end of it from this ascending level, and it's broken straight the way through. This would have been the target there. So that would have been your trading margin, which is quite nice. However, the reason I'm bringing this to your attention is because if we get the break, close, and retest under the current zone, we then have the potential for another nice move down to the next one below. So if we go back to the 15 and we get, let's say we get a nice solid break, close, retest of this area in here, we then have the potential for a very decent trade from there down to here with a stop loss about there. And that's going to yield you guys a nice 1 to 2.6. Now, with the break, close, retest methodology for an entry criteria, we can be as good as we can. Obviously, it's always good to do your job as best as you can. But the entry is very, very speculative. When it comes to pending orders, there is zero speculation. There's no speculation at all where your entry is going to be, obviously. When it's a BCR, we can say that our entry is going to be approximately 64.46, but we don't actually really know because we don't know where the price is going to be. So it is a breakout underneath, close, the retest of this area, and then you're looking for either the aggressive or the conservative break of structure. That's probably going to be the conservative. So then it's a breakout actually underneath this level, and your entry is going to be there with your stop loss down here. So instantly just doing that, our 1 to 2.6 is now more realistically a 1 to 2. Now again, this is speculation as well. Of course, if the market comes down and we get a break, close, retest of this area in here, but the retest break of structure point is like there, for example, then, this is all going to be broken right up. The entry is going to be right the way back up there again. Stop loss a little bit higher, and now you're getting a 1 to 2.72. So just be aware of that. For those of you on the other side of the pond, Braden and Matthew, I do appreciate, guys. This is not the ideal for you guys because of the lack of a pending order. You may end up missing it. If you do, then that is just the nature of what it is. But hopefully, we'll see a breakout and retest of this one in the next 24 hours. Hopefully, for your guys' sake, we'll see that tomorrow. But we'll have to just wait and see. So that's going to be a short. CAD Swiss, really nice breakout in the CAD Swiss, and the bloody thing was obviously moving against our bias. We had the ceiling of the move, which was here. Lovely breaker structure. Did get a retest. To be honest with you guys, I would have definitely wanted a BCR of this one because we are trading it upwards of new liquidity being generated. So looking at that in real time, I know myself, I definitely wouldn't have taken that as the trade. If I want to see this as the retest. That there is my ideal. I like the bars coming back down physically, hitting that point of liquidity, then getting the move to the upside. So at the moment for me, this area, which is, I would say, considerable in terms of our, liquidity generation. It's a nice one. We've had some big inflection points here. I would say that this is unsatisfactory and that we should see the price come down further to that 63.37 area before rallying further on. So at the moment, there's going to be no trading opportunity in the CAD Swiss. No, I'm not up for that one. Euro Oz, that's just looking bloody awful as well. So not much in that one. Euro Yen looking a little bit, excuse me, looking a little bit better than the Euro Australian, admittedly. But is it enough? Because, this isn't nice price action. Definitely not. So we're thinking maybe the floor, which runs through here. Although, well, actually, in comparison, it's the ceiling currently. The floor that became the ceiling. And then this is our trading margin. Now, actually, I'll tell you what I'm going to do. I'm going to remove everything. So what we're going to do is I'm going to have the ceiling there as initially indicated. That's really nice. I'm happy using that. And then I'm going to have a much smaller zone, which is going to start from this point here and then go straight across the bottom. And then that becomes the trading margins. So I would say that that is good. That's fine. It's not the best in the world, but it's certainly achievable. It's not unrealistic to think that we could trade that. So then what I'm looking at here is either the long upon the break of structure to there with that exact stop as well. So that's a 1 to 2.64. For the short, once the market rejects the point above, I would say this is a bit tricky, isn't it? It's not super crystal clear because of this move here. This move here doesn't really have any major structural point in it, unlike this. And in that area, we then have the lows and the retest and the highs and the retest. So for me, regardless of that there, this area, which won't look nice no matter what you do, that would be the break of structure point that I'm shorting the market from. So then the short is going to be from this point down to the floor with a stop loss at the 50%-ish point between big liquidity and break of structure, and that's going to yield you a smaller, more modest trade, but still nice at a 1 to 2.2-ish. Okay, so that's going to be the setup for the Euro Yen. Now, this is much, much shorter term stuff than the initial trade that we were looking at, that we got stopped out on. Because the initial trade was from the break of structure in here, which we got stopped out on, and the target profit was down there. Now, that's still a nice setup, but that's a much larger trade. And what I'm thinking here is if we've got low trading volumes and things aren't really moving too well, possibly be better to look at something a little bit shorter term than longer term. But remember, guys, no trading in the middle of here. That's an absolute no-go. We are waiting for the market to either rally, run, rally. So rally, run, rally, or run, rally, run, which would be the coming down to liquidity, breaking structure, taking the long, getting to the top, and then shorting once again. And that's what we would be looking at for this setup. Okay, so that can be labeled bright blue. Great, now it's not changing. There we go. Right, Euro NZD. Yeah, so this was a bit of a knock in the teeth, this was, wasn't it? Because, of course, the bias was actually really good, but it was just wrong time, badly executed. Well, not even badly executed, if I don't say so myself. Follows the plan, but it was just too early. We did get a really nice run down here. We got a beautiful rally on the way back as well. Do we want to chance it? That's the question. Do we want to chance it? I mean, the structural point now, just to confirm, I mean, you guys probably wouldn't even need me for this one, But the structural point for that one is there, which means it's very deep into the trading margin, which means the trade idea itself is actually only going to be from there to there, which, let's be fair, looking at the base of these candlesticks that we've seen here, could potentially be done in 2 to 3 candles if it really wanted to. The risk yield on this one is good, 1 to 2.42 approximately. No major fundamental catalyst, and no major technical risk factor. So what do you guys think? Do you guys think that's pretty decent? I guess the question is, would you trade it? Looks good. Yeah. I think it does. I certainly wouldn't have anything bad to say about it. Like it, Ian? Yeah. Yeah, Matthew? Good, good. Yeah, I mean, from this part of price action here, it looks good. I think once we go back and we look at this initial development of the price down here, this then becomes slightly obscured because then we have these lows which form a 3-touch inflection point, and it still doesn't even really have any impact, does it, on this recent price action? So I think we're just going to have to eliminate that from our thoughts and not talk ourselves out of the trade. And we're just going to stay focused on what's most recently happened here. This is the most recent price action we have to utilize. At the moment, it looks really good. From a risk profiling perspective, it makes sense. So we'll just go with that one. So that is a Euro NZD short. Now, in terms of the long, is there the capacity for a long? I mean, this is the big daily area up here, right? So we'll only be looking for the very bottom of that for a TP. We won't be utilizing anything inside it. So let's say, for example, that's the target. Now, if we decide to go for a break, close, retest, trade long, by the time the retest continuation is played out, we're going to bump straight into this area at around 180. Not only that, but it is 180, which is a big magnet, okay? Big magnet number there. So how do you guys feel about taking a trade long? Do you see any way forwards here? Do you think the risk is too high? Looking at the sizable margin we have before the TRF, is there enough space to actually have a break, close, and a retest here that we could utilize for a trade? You know, if the trade idea gets triggered here, for example, how does that make you feel? Does that make you feel like it's a good trade? Or is it too much of a risk to take the trade below the 180 area because of the nature of what the 180 area represents? Do we have the trade above? Is it a break of structure trade in between there and there? I just think personally, and this is kind of subjective, okay? This is a bit subjective, which is why I've posed the question. It's good to get you guys thinking about things like this, because I wouldn't say there's necessarily a wrong answer here. It's just about what you're willing to put on the line. So for me, I would look at this and I'd be like, okay, I think that is not a good path of least resistance, because there's too many major TRF areas in the way. We've got TRF here, we have TRF here, which is the same TRF as that one there, right? So this is quite a big TRF, which is sitting right bang in the middle. And not only is it right slap bang in the middle there, we also have the 180 magnet number, which generally speaking will attract price and create areas of a reversal. Psychological, but nevertheless, we're talking about other people handling their money. That's essentially what the markets are. So I feel that the only realistic trade idea here, if we're to eliminate as much risk as possible, is to remove the first one and actually only focus on the top one. So then we're looking at the break of structure, no retest required, the break of structure trade above here for the long up to there. And essentially what we're looking at is this area, which has been achieved once, twice, thrice, 4 times, with one stop out. And if we go back in time even further to find more data to utilize, we actually have a pretty good stab at it there. It would have failed though, but it's a pretty decent stab at it there. And probably representative of the same damn level. So I think what I'm going to do, based on this info, is I'm going to call out this middle bit as the NML. So very, very big NML here in the Euro NZD. And I'm going to have the long pending order up there for a 1 to 2.1. And I'm going to have the short pending order down here for a 1 to 2.42. So that's also going to be a split bias asset for us. Okay. Right, let's have a look at... So the GA yesterday was really good, actually, guys. Yeah, really happy with the performance on the GA. Both longs played out very nicely. Good risk-reward yields on both of them. As it stands today, though, nothing. So I don't want to get anything. Yeah, I don't want to be in the GA at all. Pound against the CAD. I swear we took a short in the pound CAD yesterday and it was a loss. So pound CAD, sell, and that was it, 253. Pound CAD sell at 253. Okay, so yeah, okay, yeah, it was that point, wasn't it? Yeah, that's it. Well done, Braden. Yeah. So pound CAD break of the flag, which was in this low here. So that short again was actually a really nice call. It was just at the wrong bloody time. So that's a shame because this today was a really, really nice little short. I actually really like that leg. Now, if we look at the pound CAD, we've got this, which is our major inflection point. So if we zone across that one, we can see that as it stands currently, we've got a really nice retest underway. Now, if we had taken a break of structure trade on this bad boy, this would have been a loss, right? Well, it wouldn't have been a loss yet, but it looks like it's heading that way. And that's because of that little blip down there, even though it's got nothing to do with the US whatsoever, is probably from the 130 PPI news for that US, which has given the market a little bit of a shakeout, a little bit of a whipsaw. So I'm going to pose another question here. Well, what if we continue utilizing this ascending level? Okay, so let's say we have the ascending level there. Okay, let's just, I just want to verify its results. So it's okay. I think it's good enough for me. Let's have another one in the middle just to see. Yeah, so I think that's okay. I actually do. I think that's all right. It's not perfect, but it does encapsulate many of the lows and the highs in this little bit of price action here. We don't need it so bloody garishly long. But the reason I did have it long, let's just straighten that out just a touch. So the reason I had it like that is because then do we have enough of a trading margin to say take a long upon the break of structure here and take the long back up to the ascending level? Break a structure trade, ascending level target, stop loss probably down, I would say about, yeah, just have a fixed 1 to 2 in fact. Now, the next zone above is going to be that one there, which is why also I've got the target profit there. And also, so not only do you guys support a long here, or do you think there's too many TRFs like the one that's situated, it's kind of messy, I suppose, like this area here. Yeah, there was probably a TRF there. So the cleanest trading margin is between these two levels. So we've had 1, 2, 3, 4 in between this area. That's in that space. We've actually only had twice the moves below. So we've got this area in here, but we also have this, which again, we would have been in the trade and probably would be stopped out very soon. But we also have a very short-term intraday possibility in between here and there also, which is yielding a 1 to 2.31 as it happens. So what do you guys think on these? You like them both? I like the short better than the long. So just in a few words, Nadia, if possible, can you explain why you like the short better than the long? The long looks good if break above what? Which one, Matthew? This one? That one there? Or do you mean the one that I pasted there and have a much shorter term trade idea, which would look something like that, for example? I mean, it almost looks a little bit too small to trade, but it's not. I mean, the spread on the pound CAD at the moment is about 0.3, and so there's no spread. I mean, to be honest with you, depending on what broker you use, you probably get zero spreads on it. So you like the path of least resistance more for the short, Nadia? Yeah, you're absolutely right. Yeah, without a shadow of a doubt. So that's a good way to think, isn't it? Which direction is most easy for price action to travel, right? Well, it is the short, isn't it? Definitely. So that's a good way to think. And I do think the long, just to be sort of neutral in our approach to the markets, it's always good to try and get at least one opportunity on either side. And that to me looks like the one. I would probably go for the one below. That is probably the trade idea that I would go for. Not that it makes any difference to the risk reward. I just think if we do break the structural point here, this one is much less significant than this one. Yeah, just as you said, Matthew. So that's going to be that one as well there, team. Definitely happy to have a stab at these. So pound CAD, 0.25% risk as always. And that one's going to be bright blue as well. Right. Okay, so we've got, what have we got? We've got 1, 2, 3, 4. We are gold in the long pending, and that makes 5. So let's get on then. It is Thursday, so I don't want to be ramping the fund up with a bunch of trading opportunities too heavily today as we get off to the latter, well, I say the last couple of trading sessions. So we'll leave that there and we'll move on to the US stocks then. So stock margins today, as I said at the beginning of the session, are okay. The level above the Dow Jones at the moment is definitely the one you want to be watching out for. So 1, retest, 2, 3, and unfortunately, I don't know if I want to skew my zone and drop that down just a touch so that actually meets. I don't think I'm going to do that. The fact of the matter is this hasn't actually hit liquidity yet, and I'm going to be very resilient with my bias. So what we'll be looking for today is the push up into this area and then a rejection of it. And we'll be looking for the rejection back down to this area in here. So right in there where the gap is and the low is as well. So that's there. So really nice trading margins on the US 30 Dow Jones. Really, really nice. I mean, this is intraday style stuff, except I would imagine we could get this done in the space of an hour after the market opens up. The long for the Dow Jones, if not taken inside the margin, is tricky. The reason it's tricky is because this is representative of the breaker structure for it. So we'll probably have the retest between these two margins, and then we'll have the breaker structure point. Now this would end up leading us for a nice long, but we're currently 0.15% up, and on top of that, we're then saying the price action has to travel a further 0.36% before the trade triggers, and then up to the target profit area, a 0.7% move, which would bring us up to around 1% gain for the day. That is nowhere near unrealistic. I just don't know, based on current market trading volumes, if that is realistic or not. So in general, Dow Jones can easily do that, but we've not been seeing that kind of trading volume over our last few US Opens. So it just gives me a bit of cold feet. So I think the safest route for us to navigate is looking at the short from the high or the long from the low of these two margins. If it does end up breaking free of this one, then you can have a stab at taking the long, but I'm just going to put it out there right now so everybody can hear. I won't be trading it outside of these two margins today. So if the market breaks up, I'm not participating, and that's the way it is. The breaker structure for the short is going to be at this area in here. Okay, we have a TR, well, that's the median. The median's about there, and then TP. If the market dives down and then bounces from the lows and the latter half of the session, then you have the capacity to trade it from a breaker structure at this area there as well. So we're not going to be using these two zones as the target profit or the stop loss target profit areas, but these are the entries for the short here and the long there. Okay. Now for the NAS 100, as I said earlier, it's not quite as good as the Dow, but it's not actually that difficult either. So we have the ceiling, nice and clear cut, straight across the top. And we have the floor, right down at the bottom. Now we have these two outliers, and these are really, really nice. I mean, this is almost a perfect double bottom. But the one that really shouts home to me is this one. And that's just allowing these two actually to become fake outs and not the lows. And that's because this one's been established much more. We've got 1, 2, bunch of areas here, 3, 4, and almost a fifth one here as well. So this just makes more sense for me in terms of high probability setup. So the margin then is this. The break of structure for the long from this low, I would say, is actually very close to where the price line is currently, except for the fact that we haven't reached our liquidity yet. So I'd probably be looking at this one here as the breaker structure point for a long. And for the short, it's going to be here. Yeah. So that's going to be the short one. So then, again, as always, price bounce from liquidity up and through, from liquidity below and through. Okay. And that's a wrap. That's pretty much it right there, team. So just to give a recap then, we've got a long pending locked in gold. We've got the potential for an Aussie dollar break close retest short. No pending order available, so you will have to be present at the markets for that one. We've got the euro yen pending, well, not exactly pending orders, but we're looking for the price reversal of points. We can lock in the pending orders once this level is achieved. Euro NZD, very much the same thing. Pending orders are available immediately, however, on this one. One below the margin, one above the margin. We have the pound CAD. We have the order going through for the long, the order going through for the short. Both of these can be set up via pending orders. You may want to do a market order, but it is at the moment 2:15, which means you only have 15 minutes for the market open. You might want to lock in these pendings so that you can focus your primary attention on those US assets. And then, of course, we have the whole collection of the NAS 100 positions and the US 30 Dow Jones. If I had to pick which was my favorite out of the two, it definitely would be the Dow Jones today. Although based on the recent trading volume, I think we'll probably be hard-pressed to find the big explosive moves. I think it might be a bit of a grind. Obviously, I really want to be proven wrong, but that's the nature of what we've been given so far. So if there's any questions, now's the chance, guys. And if not, then I'm going to wish you a wonderful rest of the day. I'll be here right there with you, calling it out as it happens, and hoping you have a great session this afternoon, guys. So, yeah, all good. All right, nice one, folks. Well, good luck out there. Have a great day today. As I said, trade it safe, and let's see what we can do. So go get them. Thanks, team. All right, take care. Bye-bye.